Hey guys, what's up? I want to show you how to trade zero DTE credit spreads using the trending band indicator, which is using trend following. So again, guys, it's quite simple. Actually, all you need to do is pull up your favorite ETF. I prefer it's a highly liquid ETF, meaning that you should be looking at SPY, you should be looking at QQQ, you should be looking at DIA, IWM, TLT, maybe even things that are more liquid in the stock world like Apple, Microsoft, Amazon, a very liquid underlying, a very liquid stock or ETF to trade. The more liquid it is, the better the strategy will work. What you want to do is you want to pull up the chart and you want to go to a 1 minute chart, because again, we're going to be day trading these zero DTE options. What you want to do is you simply want to pull up this chart. Again, this is the trending band indicator. This is an indicator that I custom built. But if you don't have access to it, again, I'm going to link below in the description a way that you can add it to your TradingView chart. But again, if you don't have it, you can simply recreate it by going into the Bollinger Bands settings. So coming onto your indicators and doing the Bollinger Bands. So Bollinger Bands like that. And then you need to make some adjustments. What you need to do is you need to come in here into settings. Again, this isn't the exact same of what I do, but again, it's going to be very close. Let's see if I can get it to pull up. Okay, let me refresh the screen. TradingView sometimes doesn't like me. All right, here we go. Yeah, it didn't even load up. Okay, Bollinger Bands. Load this up. Let's hide this for now. Pull up the study. Okay, we're going to go to a length of 200. We're going to go to a standard deviation of 1. Just like that. Now we have a rough approximation of what I had. Now again, what I had is based on historical volatility. This one is based on market movement. So again, two different things, but this is a rough approximation. It's using the Bollinger Bands, the 200 period with the 1 standard deviation. I'm going to remove this though and show you it with this. All right, so here we go. So this is the 200-day moving average, right? And then you have the 1 standard deviations, and then I've also added the -4 and the +3 standard deviations to show range. Anyways, enough about the indicator. How do we use it to profit on zero DTE credit spreads? So again, you come in here and you look at the chart. When it's in the middle, you want to do nothing. When it's in the gray line, when it's in between the 1 standard deviation, the minus and +1, then again, you want to do nothing. When it breaks below, what you want to do is you want to put on a call credit spread. That means that you're making money to the downside when it breaks below this red line. If you can, you want to have a call credit spread with a strike price at this green line, wherever that is. But if you can't collect enough credit, then again, you should do it where this gray line is, and that should be your plan. Again, when you're looking at this, the plan for the call credit spreads or the downside move is waiting for a break below this red line and then covering when it hits this bottom yellow line or when it breaks back above. Either way, but your ideal target is this yellow line. Now, our reasons for put credit spreads or making money to the upside is when a stock bounces at this yellow line and comes back up. That is one buy entry level. The next buy entry level is above this green line. We buy above this green line or sell a put credit spread above this green line and hope to profit around the top yellow. So you can see here we would have had a call credit spread. Collected the profit here, entered a put credit spread and traded it up, and then entered another call credit spread and trade it down, and then when it starts closing above this yellow line, we'll put on a put credit spread and then trade that back up. So that's how you use it. The same thing here. You can see here it crossed down below, covered here, came back up, crossed down below, covered here, crossed back up, covered down, and you can trade the call credit spread over and over and over on a day like this. Now again, these are days that trend very well. You also have very choppy days. You can see here, you put on a put credit spread, you close it right here, put credit spread, close it right here. You can see here that again, this will not work all the time, especially on super choppy days like this, where the market goes up and down and up and down and up and down. It may be a little harder because this requires a lot of active management, but this is a very viable strategy that you can use for trading zero DTE credit spreads. So again, if you want to learn or actually implement this for yourself, click the link in the description below, get access to this trending band indicator and start trading it for zero DTE credit spreads. Again, your goal should be to collect a third of the width. So again, if you're putting on a credit spread that is one width, which is a $1 wide width, collect at least 30 cents of credit. And once you collect those 30 cents of credit, you should have the movement in your favor, and use stop losses to be able to profit. Now remember, your losses are going to be greater than your wins, but you should be able to win way more when using this approach. All right, guys, if you enjoyed this video, smash that thumbs up button, smash the subscribe button, and I'll see you in the future with other credit spread videos.